All right, apes, welcome back to the data terminal. Go ahead and jack in. Today, we are decrypting the code behind the headlines. You know the suits on TV? They love flashing these big, shiny numbers at you, and they just expect you to nod along like a good little consumer. But here's the thing, we're not consumers, we're quants. We are data detectives, and we are about to expose the glitches in their matrix.
See, you got to understand, they think the economic news is a tool for control. It's their way of telling you how to feel about your money, about the world, but we see it differently. For us, it's a map, and just like any map drawn up by the people in charge, it's got some deliberate omissions, some very misleading labels, and today we're going to find them.
Okay, so let's dive into their world for a second. First, you have to understand the official narrative. You know, the bedtime story they tell everyone to help them sleep at night. It's always clean, it's always simple, and it pretty much always revolves around one master number, GDP.
So you pull up their official manual, and this is what it says. GDP is the total of all economic activity in one country, regardless of who owns the productive assets. My God, it's like they designed it to be as boring as humanly possible so you just wouldn't ask any follow-up questions. That's the textbook definition, right from their own playbook. So let's translate that from suit speak into English. What does it actually mean? Well, it's the headline. It's the big, flashy number they splash across the screen to signal boom times or recession. It's specifically designed to be simple, not necessarily true. Think of it as the economic version of a keep calm and carry on poster. But here's the thing, and I want you to stick with me on this. What happens when we find out that billions of dollars just vanish from their spreadsheets? All right, now we get to the fun part, the real investigation. We're going to treat their entire official economic model like it's a piece of buggy software, and we are going on a glitch hunt.
And really, that's the main question here, isn't it? What happens when the fundamental code they use to describe reality is full of holes? What do you do when the data itself might be the lie?
So let's look at a real-world example. Back in the first quarter of 2006, the suits told the world the U.S. economy was chugging along at a nice, solid 4.8% growth. The market hears that, algorithms start firing, people make huge financial decisions based on this number.
But then, a little while later, kind of quietly, no big headlines, they issue a little revision. Turns out the number wasn't 4.8%, it was actually 5.3%, a 0.5% revision. Now that might not sound like a lot, but that is hundreds of billions of dollars in economic activity that they just found later. So you have to remember, the facts they feed you, they're not set in stone. They're just the first draft, and they can and will change them.
And look, these little revisions, they're not one-off mistakes. I'm not making this up. Their own manuals admit to massive, systemic flaws. You've got the shadow economy, that's all the cash deals they can't even pretend to track. Then you have significant data revisions, which is just a fancy way of saying, we changed the past. They also use out-of-date weights for different industries, basically pretending it's still 1970. And my personal favorite, you're going to love this one, net errors and omissions. That is their official technical term for, we have no idea where these billions went.
So after a while, you start to realize these aren't just glitches, they're features. The system isn't broken. It was built this way. It's a classic shell game, designed to make you look at one hand while the other one is hiding the truth.
And this right here, this is where the game gets really interesting. On the left, you've got GDP. It's simple, it's easy to calculate, it looks great on TV. That's the number they want you to look at. But on the right, you've got something called net national income, or NNI. Now listen to this. Their own documents call NNI the most comprehensive measure. It actually accounts for depreciation. The fact that factories get old and machines break down. It shows the real cost of doing business. So why don't they use it? Well, look at that last point. They say it's of little practical value. And you have to ask yourself, practical value to who? It's of little value to them, because it tells a much less impressive story. It's way harder to spin.
And this is the system's biggest vulnerability. The hidden danger. Take a look at what actually makes up that big GDP number in a country like the US. A massive 60% of it is just us, buying stuff, personal consumption. That means their entire economic model is basically a rocket fueled by consumer credit and cheap imports. And, we all know how stable that is.
And if you think I'm exaggerating, let's go back to that net errors and omissions bug. This is a direct quote from the source material, talking about the UK's national accounts.
In a single year, they had a deficit, a capital surplus, and then they were left with a black hole worth 11.6 billion pounds. I just want you to let that sink in for a second. A G7 nation, one of the biggest economies in the world, just misplaced the entire GDP of a small country. They just plugged it into a line item that basically means ooks. It's a rounding error the size of a major corporation. This isn't just a crack in the system is the crack.
So, what do we do about it? We don't get mad, we get even. The suits have their system, but now we have the manual. We have the ape's advantage. It is time to turn their flawed code into our playbook.
So here it is, your new playbook. This is how you consume financial news from now on. Number 1, see their headline number, that big GDP figure. Don't react, just observe. 2, you hunt for the footnote. Look for the components, the details, and especially look for the revisions. 3, find the contradiction. Is consumer spending way up while business investment is crashing? That's a huge red flag. 4, understand the glitch. Are they hiding something behind a massive errors line item? And finally, number 5, and this is the most important part, you diamond hand your own narrative. Once you see the flaws, you know more than 99% of the people who just read the headline. You see the real story, not the press release. Because at the end of the day, this isn't about one person trying to outsmart the market. It's about our whole tribe of apes sharing what we find, flagging the glitches for each other, and building a better, more accurate map of reality together.
And of course, you know the drill. The lawyers make us put up the guardrails, so listen closely. None of this is financial advice, not even a little bit. This is just educational banter for our tribe of quant apes. We're just looking at the probabilities. Remember, the market is a casino, and the house doesn't always have to tell you the real odds.
So I'm going to leave you with this to think about. We've seen how they measure things. We've seen the built-in flaws, the missing billions, the statistical games they play. So it really begs the question, if this is the story they are telling us, what's the story they're trying to hide completely?
What do you think is the biggest piece missing from these official numbers? Is it the true size of the shadow economy? The real level of asset decay? Drop your best theory down in the comments. Let's build the real map together. We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets. Check Webull for that BTC promo, or grab your NVDA stock on Moomoo. All the links are in the description. Smash the like, subscribe to the tribe. Apes together strong.